If you receive Social Security, SSI, SNAP, or Medicaid, there is a change that took effect March 1st that could directly affect your monthly payment, your eligibility, or both, and most people have not been told about it clearly. We're talking about rule changes tied to how the Social Security Administration counts income and resources, changes that could mean hundreds of dollars more for some people, and a loss of benefits for others who don't report things correctly. Now, I know that might sound alarming, or it might sound like something you've heard before that turned out to be confusing or didn't apply to you. That's fair. I hear that all the time. So today, we're not going to rush through this. We're going to walk through it together, step by step, so you know exactly what changed, whether it affects you, and what you need to do to protect yourself. This channel is dedicated to one thing: helping people on fixed incomes understand their benefits clearly, without the legal jargon, without the panic, and without anything being sold to you. Everything I share comes from official SSA, CMS, and federal benefit guidelines. I'll put the source links in the description below so you can verify everything yourself. Let's get into it. First, let's talk about what the March 1st update actually covers. The Social Security Administration periodically adjusts what are called the resource limits and income exclusion thresholds that determine whether someone qualifies for SSI supplemental, security income, and how much they receive. Here's a plain language breakdown. If you're receiving SSI, there are two things SSI is always watching: your income and your resources. Your income is money coming in, wages, gifts, other benefits. Your resources are what you have sitting around, money in a bank account, property, certain assets. For SSI, the resource limit has historically been $2,000 for an individual and $3,000 for a couple. Those numbers have not changed with this update. I want to be clear about that, because there is a lot of misinformation online suggesting they did. They did not. What has changed involves how certain types of income and support are counted, specifically around in-kind support and maintenance, sometimes called ISM. Here's where people get into trouble. If a family member helps pay your rent, your utilities, or your groceries, SSA may count that as income, even though no money ever touched your hands. Under previous rules, this could reduce your SSI payment by up to 1/3 of the federal benefit rate. That's been a painful rule for a lot of families. Under the updated policy, SSA has significantly narrowed how ISM is calculated for certain housing situations. This means some recipients who were previously having their benefits reduced because a family member helped with housing may now keep more of their SSI payment. Second, this doesn't happen automatically for everyone. This is the part where I want you to pay close attention. If your situation has changed, meaning someone in your household has started helping you with housing costs or stopped helping, you may need to report that change to SSA. Failing to report it correctly is one of the most common ways people accidentally create an overpayment situation, where SSA later comes back and says you were paid too much and now owe money back. We are going to talk about how to avoid that. Next, let's talk about who this update actually applies to. If you receive retirement Social Security, meaning you paid into the system through work and now collect a monthly benefit, this particular ISM rule change does not affect your payment amount. Your Social Security retirement or disability check is not reduced based on whether someone helps pay your rent. However, if you receive SSI, which is a need-based program for people with limited income and resources, then this update is directly relevant to you. It also matters if you receive both SSI and regular Social Security, which is called concurrent benefits. In that case, your SSI amount is already reduced because of your Social Security income, so the ISM change could affect the remaining SSI portion. If you're on SNAP, food stamps, your eligibility is often tied to your SSI status. So if your SSI payment increases because of this rule change, you'll want to check whether that affects your SNAP benefit. In most states, if you receive SSI, you are automatically eligible for SNAP, but your benefit amount may be recalculated based on income. And if you're on Medicaid, the good news is that in most states, SSI eligibility still automatically qualifies you for Medicaid. A modest increase in your SSI benefit due to this rule change generally should not affect your Medicaid coverage, but this varies by state, and I'll explain how to check. Now, here is the practical part. This is where we get into what you actually need to do and what documents you may need. Step 1. Find out if your benefit was adjusted. If SSA applied this change to your account, you may have received a letter. Check your mail carefully. SSA letters often look like junk mail, but are critically important. You can also log into your My Social Security account at ssa.gov and look for any notices under your message center. If you don't have an online account, I'll put a link below to help you set one up safely. Step 2. Report any changes in your living situation. If someone has recently started helping you pay for housing or stopped helping, you need to report that to SSA. You can do this by calling, visiting your local SSA office, or logging into your online account. Keep it simple. Just tell them what changed and when. Write down the date you called, the name of the representative if possible, and any confirmation number they give you. Here's the important part. Do not wait. SSA requires that you report changes within 10 days of the end of the month in which the change happened. If you miss that window, you could end up with an overpayment that SSA will ask you to pay back, sometimes months or years later. Step 3. Protect yourself with documentation. If you live with family or receive help from someone, keep records. Even a simple note, written and dated, that describes your living arrangement can help you if SSA ever questions your case. If you pay rent to a family member, try to pay by check or bank transfer so there is a paper trail. If utilities are shared, keep copies of bills showing whose name they're in. Step 4. Understand spend down and able accounts if you're near the resource limit. If you're getting close to that $2,000 resource limit, meaning your bank account or savings is approaching that number, there are legal ways to protect yourself without losing benefits. One option is an ABL account that stands for Achieving a Better Life Experience. If you became disabled before age 26, you may qualify to open an ABL account where you can save money without it counting against your SSI resource limit. The annual contribution limit for 2025 is $18,000, and the account can hold up to $100,000 without affecting your SSI. Another option is what's called a spend down, legally using money for allowable expenses before the end of the month, so your bank balance stays under the limit. Allowable expenses include things like medical costs, home repairs, household goods, clothing, and prepaying bills. What you cannot do is give money away or transfer assets to family members to get under the limit. SSA considers that a violation. Let me walk you through the mistakes I see come up most often, because knowing these could save you from a serious headache. Mistake 1. Assuming the update applies to you without checking. Not every SSI recipient is affected equally. Your situation depends on your living arrangement, your income sources, and your state. Don't assume your benefit went up or down. Verify it directly with SSA. Mistake 2. Not reporting because you think it won't matter. Every change in your living situation, income, or resources is supposed to be reported. I know it feels like a lot, but SSA cross-checks information with banks, other federal programs, and state agencies. An unreported change discovered later is always worse than one reported on time. Mistake 3. Relying on a neighbor or family member's interpretation of the rules. I say this with respect, because I know we all try to help each other, but Social Security rules are genuinely complicated, and a well-meaning person can give you wrong information without knowing it. Always confirm with SSA directly or with a certified benefits counselor. Mistake 4. Panicking and making sudden financial moves. I've seen people close bank accounts, give away money, or stop accepting help from family because they're afraid of losing benefits, and those actions can actually create the problem they were trying to avoid. Make changes carefully and slowly, always after checking with a professional if possible. Here's what I want you to take away from today. This update is real. It affects real people. And for some of you, it could mean keeping more of your SSI benefit each month, without doing anything other than making sure your situation is correctly reported. But the most important thing you can do right now is simply stay informed and stay in contact with SSA if anything in your life has changed. You have rights, you have protections, and you deserve to receive every dollar you are legally entitled to. In the description below, I've linked to the official SSA page on ISM rules, the ABLE National Resource Center, and instructions for setting up your My Social Security account. Everything is free and official. If this video helped you, or if you have a question about your specific situation, please leave a comment below. I read them and your question might help someone else watching too. And if you know someone, a neighbor, a family member, a friend, who is on Social Security or SSI, please share this video with them. These updates don't always get communicated clearly, and you might be the reason they protect their benefits. Take care of yourself. You've worked hard to get where you are, and you deserve to keep what's yours.